Welcome to my channel. I'm Dr. Romano. In today's video, we are going to be discussing Sam Bankman-Fried and his hedge fund that he had for the cryptocurrency market. Now, if I were looking at this fund and I was doing my operation due diligence, this is what I would have done. Now, it's very odd how he raised so much capital. He raised an enormous amount of capital, and for whatever that amount of capital is, whether it's 38 billion or million, whatever it is, it's enormous. And in the short amount of time that he actually raised that capital. The issue here is I'm going to walk you through an analysis how you would actually do your operational due diligence of a particular fund. Before we continue the video, please remember to do thumbs up. It's right there. It doesn't hurt to do it. And please subscribe to my channel. You're going to get my videos anyway, but if you subscribe to my channel and do thumbs up, it helps me out a lot. Thank you so much. For starters, typically when you look at a hedge fund, you have to look at how many years of trading track record they have, and that's at least 5 years. Sam Bankman-Fried did not have 5 years trading experience on the cryptocurrency market. So that's another flag up. When a fund starts out, if it goes up to approximately 350 million, then something happens to their returns. And this is a crucial amount of assets under management that has to be taken very seriously. And what do I mean by this? Well, I'm Dr. Hedge Fund, as you know me, but I have a PhD in financial management and leadership. And I have written over 1,000 pages, about 900 something pages on hedge fund selection. And so my title, what I specialize in, is operational due diligence and hedge fund selection. So in other words, I would be a funds of funds manager of a funds of funds, okay? Now, I'm going to walk you through on something else later, but this is who I am. And so someone who looks at a hedge fund, one, they have to prove themselves in several different markets. And depending on when they start, they need to prove themselves in a market that's collapsing, a market that's trading sideways, that has a high volatility during the time that they trade. And there's other things that I could go into, but I just want to make it simple. If you only had 2 years or not even a 2 years experience, how did he amass so much assets under management? And this is the question that really bothers me as someone who is a doctor of this. And it bothers me because the people who allocated capital to him, apparently they really don't have experience on how things should be done. And this is a perfect example why big investment banks always seem to do things very inappropriately, because they haven't updated their methodology, they haven't improved their portfolio management, because the employee of a company can't do that. It's basically the company that has to do it. And because of that way of thinking, that you're not the owner of the company, nothing really gets improved. So, for example, when Henry Ford was at Ford, things got really improved. He improved the assembly line and all the parts to the car, etc. The owner of Tesla, Elon Musk, is doing the same thing. He's improving all the different parts that go into a Tesla. So when you understand that the people with all this capital, they really don't know what they're doing, then why do you invest your billions of dollars into these big banks? This is the question that you need to be asking yourself. Somehow, Sam Bankman-Fried was able to raise a lot of capital, okay? It was a huge amount of capital, and for a company such as a hedge fund, a cryptocurrency fund that he had, where is the operational due diligence in the investors that invested in him? And this is what really bothers me, because I have a track record of 8 hedge funds that have been trading, that in my hypothetical funds of funds, they're doing really well. there's an average return of approximately 30%. So if you take the returns over a 5-year period, because that's what you do when you look at the actual hedge fund, you always take 5 years trading returns and see how well they did. Secondly, in 2020 was an incredible year because we did have a stock market collapse. So when you look at that year, you analyze how well they did and how bad they did. So at this point, you have to analyze the situation that he starts a fund, he raises an enormous amount of capital, in excess of $1 billion. It was much higher than $1 billion. And already, based on my PhD research, you would never invest or allow a hedge fund to get so large so fast. Because what happens is that in certain strategies, a position size is affected and it becomes harder to reduce those position sizes and be nimble. So smaller hedge funds, they are producing phenomenal returns because of their position size being small. They're able to get in and out. And when you think about that and hold that thought, position size, once you go from 20 million assets under management to 350 million, something happens with the position size. Something happens with their returns. They get watered down. So certain strategies do really well with large amounts of capital, and certain strategies do really bad with a large amount of capital. Who's the asset allocator at a particular portfolio or a family office or whoever it is, they need to be looking at this. But in Sam Bankman's company, there was no returns. It just started. So right there, that's really bad. Because you don't know how well they're going to do with 20 million or 100 million. And once it approaches 300 million, you start to take note what's happening. How would they return? For example, one of the hedge funds in my hypothetical portfolio, they are one of the newer hedge funds in my portfolio of 8. And what's happening now is they basically made a lot of money within 2 to 3 years. So their assets under management has grown so much, so fast, and because of 2022, they've done pretty poorly. But that particular fund is called an oddball, and that's very important to include younger funds because, everyone needs a chance in life, but also this is about making money. I could understand if in big portfolios that Sam Bankman's fund was considered the oddball. But you have to remember that he had just started. In other words, he's able to somehow raise millions of dollars of capital, whether it was 38 billion or whatever that number was. Even $1 billion in a hedge fund is a lot of money. And once all hedge funds, and this is a statistical analysis I had, at around $350 million, most hedge funds start to get watered down returns, okay? It's only the very, very sophisticated hedge fund managers with a very, very good strategy and that they have a really good risk management approach on their losing trades, on getting out. Do they actually overcome that? And yes, in my portfolio is around 4 hedge funds that even if they are big, in excess of $1 billion or more, they're still doing really well. But that's out of a database of 18,000 hedge funds. So, and there's only a handful that actually are doing well after $350 million. So this is why the whole industry needs to change. These really large hedge funds, they need to give every single trader that they have their own hedge fund entity and become the investor, the first-time investor. And of course, they're going to get a big discount, Instead of 20%, maybe let's do it 15% management fees, whatever it is. This way, the actual hedge fund manager originally should become the funds of funds manager. And because of that, their returns will actually improve because they could separate each portfolio with 8 hedge funds in each funds of funds and if you have 300 billion or whatever it is, the amount, you could separate each fund having, let's say, 2 billion. So each fund of funds have 2 billion and have, several hundred different funds of funds. This way you could regroup every single funds of funds based on a return profile. And in Sam Bankman's, the whole issue with that is that these asset allocators, they didn't think about any of that. They just wanted to get into the cryptocurrency market. And they saw this young kid thinking that he's going to make so much money and he's doing phenomenal returns. But you see, that young kid has not traded through different types of markets, of high volatility, low volatility, you name it. They only traded through a market that was rising. Cryptocurrency kept rising as more investment banks, more big billionaires kept investing into that market. And then what happens is the public joins that. You have all the young people joining that, and it pushes the market even higher. But what happens when it comes down really fast. Look what happened to Tesla stock, 900 to whatever it is today. That's a huge loss. And that's why all investors that allocate capital to hedge funds or cryptocurrency funds, whatever it is, whatever type of company you want to call it, this is something you have to look for. And what I don't understand is that my hypothetical funds of funds, it's a proven track record based on all the hedge funds that have been trading. They're all doing really well, but yet I haven't been able to raise capital. And it's mind-boggling to see that I'm 47 years old. I have a PhD in this, but yet a young 22-year-old kid raises in excess of $1 billion. I'm talking about 38 billion and even more. We don't even know the exact amount. But the point is that how did he do that? Who did he know? Yes, he paid off celebrities, but that doesn't mean anything. That even if I have Harrison Ford behind me, supporting me, and saying Dr. Romano is the best funds of funds, that's not a reason to invest in a funds of funds. The real reason is to do your due diligence. Who is my administrator? Who is the hedge fund accountant? What are the returns over a 5-year period? What type of market was the returns over a 5-year period? So there was 2020, a market collapse. How well did it do, that fund? There was 2019, how well did it do that year? There was 2021, how well did it do that year? And that's all an investor really can rely on. Now, in Sam Bankman's investment company and a hedge fund, what did they actually do? What did the investors actually look at? It just doesn't make sense. Why? Because he went to a good school and technology of something. It's not Harvard. But that's not a reason to invest in someone just because they go to Harvard. Or what was his work experience? Apparently, they didn't care about work experience because he didn't work for an investment bank. He didn't work for a portfolio manager. He just started out of nowhere. And this is what really is disturbing, because apparently, Mark Cuban is right. Mark Cuban said in a YouTube video, he's being interviewed on his history and how he got started. And he said, you have to know how to sell. Because it's easy to make $1 billion when you have a concept or an idea, or in my case, a hypothetical funds of funds. Well, I guess I'm not really good at selling. Because a 22-year-old was able to raise $38 billion, but I can't even raise $100 million. And so for those of you who are watching this video, I would really appreciate it if you could please tell me through messages on LinkedIn, my first name is Anthony, my last name is Romano, and put Dr. Hedge Fund on LinkedIn. And please tell me, what am I doing wrong with my approach? Maybe it's how I present myself, maybe I'm wearing a suit, but you know, this is professional. And in my era in the 1990s, they taught us in college, you have got to look professional. If you want to sell a concept, a business, or if you want to be credited in some way, to look professional. I cut my hair, I keep it short, yet Sam Bankman's hair, it looked like he never combed it. Or his dirty white t-shirt, he's on stage with Bill Clinton. He's on stage with Bill Clinton and he's wearing a white t-shirt that's yellow. It was never cleaned properly and it probably wasn't cleaned. This is very disturbing in my case. So please send me a message. Tell me what it is I'm doing wrong in my life. I've done everything possible. I have 2 MBAs. I have a PhD. I've written a PhD on the most lucrative PhD in the world. There's not many people in this world that do a PhD on hedge fund selection. Yes, I love money and I love making money and improving strategies. But tell me, why am I not a trillionaire yet? I should be a trillionaire, because with Sam Bankman, what he raised, $38 billion, with my average return ratio of, let's say, 20%. Let's just say it's 20%. It's actually not. It's higher. It's like 30. But let's just say 20. Every $1 billion, I would make $200 million for the clients. So out of 200 million, how much do I keep? Well, I keep 10% of that. So 200 million would be 10% is 20 million. So I would make 20 million every $1 billion of assets under management that I would have if I did a 20% return. So if you take that 20 million and you times it by 30 for 30 billion assets under management, my income would be a fortune every year. I even know how to save the money and preserve it. I would create a private foundation, take 30% of my income every year, dump it into the private foundation tax-free, and the other 70% of my income, I would put it in a donor-advised funds, so that the funds could go back into my funds of funds and become a client. And my private foundation, that money could be put back into my funds of funds. So it's just incredible how some people, they have the mind how to do it, but maybe accomplishing it, I don't have it. Or maybe there's something wrong. I know when I started 6-7 years ago, I started to try to raise capital at investment banks, and the only thing they wanted to hear was, we're looking for cryptocurrency trading. We're looking for cryptocurrency traders to invest in that industry. And I was just so discouraged. But the fact is, if they would have invested in me 6 years ago, the equities market did an incredible amount of returns that were steady over the 6-7 years. So they lost out on really good, polished returns. Because now, try to make money in cryptocurrency. It's amazing how the people at investment banks, these people that work there, they really don't know what they're doing. They're just an employee. They can't be an entrepreneur. They can't say too much. They can't bring too much to the plate because their coworkers and the competition become a problem. So it's just sad that most of the world's capital are in investment banks. And this is what has to change. You, the investor who have multi-billion dollars to invest, take your money out of investment banks. They should not be there. You need to take the initiative on investing in multiple funds of funds. Every $1 billion, if you have $20 billion, let's say, in actual cash that you can invest, then you should be investing in a portfolio of funds of funds. Not just going to the 10 top hedge funds and saying because they've been around for 20 years and they have $300 billion in assets under management and they did this and they did that, oh, and their returns are 5%, that's a safe bet. No. A 5% return It depends what type of market that they're trading in. So 2020 is a certain type of market and it has a risk profile. In 2019 was a certain market. In 2021 was a certain market. And you have to see how well they did. Don't just go for the hedge funds that do the least. That's actually really bad. Because the fact is, the larger their hedge funds, the more the returns get watered down because they have too many hedge fund traders trading for them. Whereas a funds of funds manager, they could select which hedge fund they want to include to improve their returns. So that's what I wanted to say. Please contact me. Tell me what am I doing wrong. And if Mark Cuban is watching this, give me a call through LinkedIn and tell me, since you're an expert on selling a product and you made $1 billion or $2 billion on selling that product, maybe I need some advice. I had met somebody and he was going to a seminar and he was a public speaker for motivation. And I told him my story over about 50 minutes because I got to talk to him personally for free. And after he heard my story, and he said, "Anthony, are you afraid of being successful?" And my heart started to beat really fast. And I think that's what it was. Because my whole life I focused on going to school to ascertain the education necessary to make the money. And once I actually finished a PhD, I did get a little depressed for about 2 years. And I kind of didn't know what to do next. Because my whole life, I was focused on becoming that doctor and becoming the author, that the next stage of my life, it was like, what am I going to do? I couldn't put it together. I mean, I knew I wanted to be a funds of funds manager and have my own funds of funds, and that's all I ever wanted to do was become my own boss, my own company, and that's why I completed a PhD in that, but I didn't know how to get there. And then as I spoke to each hedge fund manager, they gave me advice. You have to go to the investment banks, the people who allocate money. And I tried that and they all were going for cryptocurrency. I got really discouraged. Then investors who have $1 billion or more, I know who they are. I speak to them. Some of them are even my friends and they know who I am. But yet, I still am not a trillionaire. And this is really disturbing because I have every aspect perfected, but yet I don't have an investment client for my funds of funds that I want to start. And every time I do, something happens. It's probably not the right personality. I don't know what it is. So for you people who are very, very successful, such as Mark Cuban or whoever it may be, please tell me what I'm doing wrong. Maybe it's my personality. Maybe I look really young, but I'm 47 years old in 2023. And not only that, Sam Bankman was able to raise $38 billion in excess within 2 years, and he was only 22, 23. So, and the people on his team, they were all kids. So that was another issue when I was trying to raise capital. A previous investor said, well, you don't have a team. Well, Sam Bankman was able to raise $38 billion and his team was 22-year-olds with no experience. So apparently it's not presentation how I look because I have nice hair, I wear a suit, I wear a tie, but yet Sam Bankman doesn't even wear a suit or a tie or do his hair. He just gets up out of bed, has the same t-shirt, and doesn't even comb his hair because it looks like an afro. So again, there's something wrong and I need to find out. So please tell me that. And don't be afraid because I love criticism. And number one, that's how I've learned in my life is through criticism. I've improved every aspect possible, whether it was riding a horse, whether it was learning how to read, whether it was actually wanting to go to college. Everything was a hurdle in my life, but I went through it. Thank you so much for watching my video. Please remember to subscribe to my channel and do thumbs up. It's right there. It doesn't hurt, but it really helps me out. Thank you so much.